All right, what's going on, Tycoon? Super excited for today's video. We're looking at the Magic Empire Global, baby. Okay, MEGL. This is another short squeeze play. This is an IPO attack play. All right, that is what has been going on. All right, so I'm gonna give you some trading ideas. Okay, no financial advice or anything, and I'm gonna break down also why this thing has been squeezing and what really is going on with the stock MEGL currently. Okay, so just make sure to like, comment, and subscribe, and we're going to jump straight into it, starting off by looking at an article that came out 8 days ago. Okay, so at the time of this recording, it basically came out last week, and you can see the headline: Magic Empire Global stock continues to squeeze higher. Right, skyrocketed in value. All right, they're calling it a pump and dump, a ramp and dump. All right, new terms, coming up with new terms. All right, it's very similar, okay, just like this one here, to AMTD. All right, now I covered AMTD, HKD, or HKD. I covered both of those. We took a look at the volume profile, and I showed you guys that there were some very fishy things, and we kind of just went over how this was very likely to fall in the future. Okay. So that's kind of the sense of what's going on here, right? Is we have these Hong Kong based IPOs coming, all right, and we have these IPO attack groups, right? These people who are looking to target IPOs and try to get a squeeze out of them and try to cause them to rally up massively. Okay, so you're going to want to pay attention to them and pay attention to the different companies. Now, right 2 days after that article was written, it plunged 90%. Okay, 90% plunge right here. All right, as you can see, after its post IPO squeeze. All right, now why is this important? Because that's essentially what happened with HKD, right? It didn't have a 90% drop the next day, but it fell very substantially, right? Once all that hype and momentum was over, people took their profits and then they exited the play. All right. Well, now we can see again. All right. So we have 8 days ago, there's a squeeze, right? Then 6 days ago, there's a plunge of 90%. When something drops 90%, all right, that is an insane overreaction. And stocks tend to be oversold, right? So what we're seeing is people jump back in, okay, and it just rallied 77% after we talked about just plunging 93%. Okay. So really important stuff is going on here. And again, it's these are Hong Kong based companies that are IPOing into the US stock market, and being attacked by IPO attack groups, and giving some very nice opportunities and setups, right? This stock rallied tremendously yesterday, right? I'm going to show you a little bit of how to get some bullish price targets. Okay, and we're going to look at what my bullish price targets are if the squeeze continues, right? And if this upward momentum continues, all right, you can see here that we actually already came and hit this 2056 level right here. All right, we came up towards this one right here. All right, our 261.8 level on the fibs at 2489. Look for that to hit today. Okay, if we hold above this level, most likely we're going to try and reach the 2489 level. All right. And if we break below there, we have our breakout level right here, our blue breakout level at 1788. All right, so above 1788, we can stay bullish. Okay, we can stay bullish and continue to head higher. All right, but below 17.8, we're going to head lower. All right, now this doesn't mean that the stock cannot dip lower and recover, find support, and continue to head back upwards. Okay. Let's go ahead and look at our volume profile. Okay, for the for MEGL. Okay, for Magic Empire. And this stuff right here is going to be the volume profile. Okay, it's this, okay, and what this does is this tracks volume by price. All right, a lot of people track volume by time, right? And they look for high volume on a time level, but they do not look for high volume on a price level. This is very, very important, because what you tend to see is you tend to see the market, right? The way the stock market moves and works is you see price action move from high volume node here to high volume node here, right? And we can see that there's weak volume, very low volume up at these higher price targets here, right? So what we're going to need to see is we're going to need to see these volume bars expand, right? Okay, we're currently trading in this zone right here. All right, there's a potential that we could head lower back to this high volume area. Okay, this is our highest volume node. This would not be a bad area to look to get a position, right? All right, so I gave you one trade idea, right, with the blue breakout level staying above there. You can look to play bullish plays, right? But if we look again, this is where all the volume and the price action is happening. Okay, so if you can look to establish a position in between this area, what you can do is you can see, are we going to get a break below our 50% level on the fibs and head lower? Okay, right back down to this high volume node area, right around 12, let's just call it 10 to $13. Or are we going to pull back, right, and consolidate in this high volume area, and the buyers are going to drive it back up? Okay. So again, looking at the volume profile, we can see that it's weak market structure, weak volume up here, right? So what that actually means is that price is going to move very quickly through those levels. Okay. As you can see here, super quick movements, right, through those levels, right? No volume at all, pretty much. And we're just moving very, very quickly. So when you're seeing something just dropping straight down like this, okay, and you're taking a look at your volume profile, what you're seeing is that there's just no presence here, right? There's no presence in the market, okay? Here, all of these areas down here have a, high volume nodes, high volume nodes, high volume nodes. We have no volume essentially right here at these levels. And that's why you're seeing it move super quickly, right? So if if a mega squeeze was really about to happen, there's such weak market structure over here that most likely we're going to come up to, close to $60 on Magic Empire Global, right? So if you see it rally up and go up, another 200 to 300% over the, coming weeks or a month or something like that, this is going to be why, right? It's because we have a lot of volume, we have a lot of interest in buyers down here at these levels, right? Um, who knows if there's a lot of shorts left to squeeze out, right? Because this thing had such a big drop of 90%. There's no reason for these short sellers not to take profit unless they're greedy. Lucky for us, they're super, super greedy, right? 90% isn't enough. They want to get it down 95%, they're super greedy with it. So if they are loading up on shorts at these levels, right, and we're able to break through these levels, okay, and get a squeeze out of there, there's no market structure over here to stop us from heading all the way back up to possibly 60. And 60 is not too bad, not too far off. When you look in the recent highs, we're 250. Okay, so we have highs of 250, dropped 95% almost to 767, and now we're back up at 1773. We have nice volume in these areas in between $7 and $17. So, this is going to be a lot easier for you to get in and out of your positions at the price that you want. And it's going to give you some, good day trading levels, right? But if you're wanting to play the squeeze, again, we would look for the short sellers to get squeezed out up at these levels, and for that weak market structure over here to give us a nice path, at least up to 60, potentially higher. All right. So again, no financial advice or anything like that. Just want to break down the chart for you guys. We'll zoom back in and take a look at the levels, okay? Just so you guys have them. And, I didn't go over the fibs above our 261.8, but we do have a price target up here at 31.9 as well. Okay. So I'm going to be looking and seeing, what happens. Okay. Are we going to stay in the bullish territory, right, above this level here at 1788? All right. Or are we going to be heading back down? Okay. Are we going to break this level and head down, possibly test this level, break it, possibly test this level, break it? All right. So, these are all levels where you can look to establish a position, right, and set up some risk tolerance. Okay. Or risk reward, right? You need to have some type of a risk profile, risk management, All right. So, if you're entering in blindly, just buying, hoping that it squeezes upwards, right? What are you going to do if we break through our 1788 level, okay, and head lower, possibly down to 1571? Are you going to panic, or are you going to, stay calm and say, well, we have this level down here, 1354, that we bounced off of yesterday intraday and continued to push higher, right? So there's lots of different ways. And I just wanted to give you some nice price targets. Okay. These, price targets over here. So that way you have a little bit of a better game plan versus just heading in blindly, right? You can come in and buy in at 1788, look to take profit at 1906, right? For a very small move, right? But that's still a good day trade. You can look to get in at 1788, sell at 2056, right? And that's a little bit of a bigger move. Or, you can look and see, are we going to bounce off of this level here? Or are we going to bounce off of this level here and rally upwards to hit our 24.89 price target, right? Or if we break the 1788, right? Because above there we're bullish, below there we're slightly bearish. So you can play level to level, right? So you could short it from 1788 to 1695, right? And if we have a break below 1695, you can short it down to 1571. So you can play these things both ways, and the Fibonacci is a mathematical formula that will really just tell you where the price is going to be drawn. This mathematical formula, the fibs, they exist all throughout nature as well as the stock market. All right, so it's not so much of me just making up my own random lines. We're just using a little bit of math here. Okay.